Welcome to Markets Now. I'm Michelle Rook with Allison Thompson with the Money Farm. Well, we are seeing grains lower this morning with the livestock futures. Hogs have been pretty well supported. We've seen a little bit of two-sided trade over in the cattle complex. But Allison, let's talk about the grains. We had a pretty nice update yesterday. And so is some of this profit taking, or is this just influence from this outside market negativity that we saw at least early in the session?
Yeah, correct. I do think it's some profit taking. Again, we're going into a weekend, and yesterday's rally did have a lot to do with the rumors on Russia-Ukraine escalation and things there. So it just brought a lot more questions to the table on greens. So we did see a nice bump yesterday, but to see some profit taking after that is not surprising. And again, a little bit of a risk off mode going into the weekend. Who knows what we'll come back with as far as headlines on Monday, but still overall a supportive week here honestly on the grains. It looks like we're going to have a few higher closes across the board, which is really good to see. It's been a while, so it's still really good to see the action we've had here this week.
Yeah, very encouraging. And corn actually had a bit of a chart breakout yesterday, didn't it?
It did. And even overnight, we retested that 499 area. And we broke through a few levels of resistance here this week, which is awesome to see for corn. We've been so range bound in it. It's really been sandwiched in a fairly tight trading range of about 25, 30 cents, which I guess is kind of large for corn. But we've really been stuck in there for the past couple months. So to see the top end of that range tested here again is good. But to cross $5 seems to be an ongoing hurdle here for this market. So I think we're still going to need some kind of fresh news to push it beyond that point. Hopefully we can do it next week. We do have the USDA report coming out late next week, which definitely could adjust some fundamental data. Obviously, a big wild card still being U.S. production. But other than that, I mean, we are starting to enter the season for South American weather as well, which could obviously throw a wrench in things. And as we saw yesterday with Russia-Ukraine headlines, any kind of concern there too could definitely push us above some of these key resistance levels.
Yeah, it'd be nice to see us close above $5. And then what would that open us to, do you think? Is it just going to be a pretty short-term rally if we get above that level or not?
Well, honestly, I'd really like to see the market close above that 510 area. If we could get above that, I think we could probably go to 530. But I know those seem like pretty steep things. But we'd have to see what happens when we close above $5. If we'll see some of those stops being run, if that'll push the market, and also what the funds are doing too. Obviously, we had a pretty good week this week. It'll be interesting to see this afternoon's managed funds report, just to see where positioning's been, if they're continuing to add to shorts, or maybe they're starting to exit some of those at this point.
Yeah. So you mentioned we saw the short covering in the wheat yesterday on the Russia-Ukraine news, but are we at price levels down here, Allison, where we're starting to be competitive and stimulate some demand?
Yeah, and we've seen that actually earlier this week. We had a good sale from China, which was phenomenal to see and not routine by any means. So we are definitely becoming more competitive, and there's definitely rumors circulating of demand for U.S. wheat out there. But again, we're in the time period where we should be starting to shift a lot of the market focus to global production. Now that the U.S. season's over, obviously we do have winter wheat going in the ground and conditions look good there. But this global demand thing is definitely something to watch, especially with these production concerns in multiple countries. It's dry in Australia. We're seeing dryness concerns in Russia and Ukraine for their winter wheat planting, and the EU on top of it. So, and these guys have been really big suppliers on the global market. So if there is supply concerns, it could definitely help global prices increase, which in turn should help U.S. prices too. But as of right now, we're definitely competitive. We know China is a shrewd buyer. So that was definitely a good thing to see this week, that it sparked some demand. But now we just need it to continue.
Yeah, so we can get some of these funds out of their short positions, right?
Yeah, we need them to get spooked at some point to turn this thing around. And obviously, at some point, they're waiting to squeeze as much as they can out of the market before taking profits. And just because they're taking profits doesn't mean they're switching to long positions either, hence a bear market rally. So it still remains undecided on which way that's going to go. But given the oversoldness of the market here on all three wheat exchanges, I would think that we are due for some kind of a bump here going into the end of the year. We've been kind of hoping for that here all the way along, but we are starting to see more of a fundamental story develop.
No doubt. The soybean market, what do you think about whether we've put our low in our harvest low yet or not after we made those new lows for the move this week? What are you seeing in terms of chart action?
Yeah, no, it's definitely interesting. I think we were all kind of shocked to see that lower trade here this week, but to actually match that 1-for-1 was kind of impressive. To not see stops being run at that level, but to continue up from there, definitely a good sign. And to come off of it really good, even that day we bounced and hit it. So definitely good looking at it, but it's definitely not out of the question. I mean, even today we're down a little bit here this morning, double digits. And it isn't that far away. We're within, that 10, 20 cents of retesting that low. So we're not out of the woods yet. But to be honest with you, good support is around that 1270 area. So if we're able to hold back going into the end of the week, and we're definitely testing that area here today, if we can close above it, definitely would give us some optimism going into next week. So there is some levels there. Otherwise, that $13 area is kind of that next point of resistance.
Yeah. And of course, there we're continuing to watch South America and their planning progress, but we've also been concerned about our slowdown in exports with the river. And there's been a lot to digest there beyond just harvest pressure, right?
Yeah, there definitely is some concerns here going forward. Obviously, demand is still running behind with exports and things like that. Like you said, the river isn't helping us out either, but we are getting some good chances of rain. So if those continue, obviously not good for harvest progress, but it would definitely help the river levels out going into winter here. Otherwise, we're kind of looking at unprecedented things, but we are kind of matching last year's river action and barge freight increases and all those things. So it'll be very interesting to watch here going forward. It will have an effect on things. And again, we're in our peak export season, so we should be starting to see some things pick up. On a supportive note, we had some good sales early in the week. We didn't see any export action here to finish the week, unfortunately, for beans. But there too are weekly export sales, so we're on the higher end of expectations. So there is business happening. That's good, but we need it to continue desperately.
Yeah. Cattle market is corrected off the all-time highs here with, some economic concerns. It seems like it's been super sensitive to that. But do you get a sense this is just some healthy cleansing in the market or not?
Absolutely. You can only go up for so long and you're going to have some type of a correction. And obviously it cleans out some of those guys that maybe don't have the risk tolerance to be in the market. And we've been preaching for a long time here that cattle are due for a correction. So make sure you have your insurance or some puts in place to protect these prices. Because honestly, it could go either way. And if we are going to see a sell-off continue, it's likely going to be just as steep as we've seen here this week. But it is good to start seeing it come back or at least find a bottom. Again, the fundamentals of cattle are very supportive for that market, but the outside markets are definitely the wild card here, and they've definitely been up and down. Looking at another down week here this week on economic data, but obviously a few different moving pieces telling different stories in cattle, so it's always good to make sure you have some hedges and have some protection in place here moving forward.
Yeah. And do you feel like we're done correcting in hogs after the hogs and pigs reported? We got all that digested now?
I think so. I hope so, especially when we're starting to see some support here too. And we had good export sales this week too on pigs as well. So we did get a 22-week high. Really good to see in hogs. So a lot of it going to Mexico and China. Good things to start seeing here in that market. So honestly, there too, it looks really good that we could continue to see at least another higher push here into the end of the year.
You bet. Thanks for joining us, Allison Thompson with the Money Farm. That is Markets Now.